I'm going to ask if we could start with Marlene, if she could talk about the stock exchange and ways in which people can raise capital using this medium.
It is important in talking about the stock exchange to really delve into the topic that I've been asked to speak about, development of the exchange and how companies use the market for growth. First, we need to talk about the infrastructure of the exchange. One which a company that has been was started in 1969, where it was an open outcry system, which was not as secure as it is now. In 2000, we decided to move towards an electronic trading platform and an electronic settlement platform through our subsidiary, the JCSD. It's important to talk about that because we want to establish the confidence that people will have in terms of raising capital on the market and also the secondary market activities. The stock exchange regulates the various players in the market, the brokers, the persons who are using the market to raise capital, and also the end users in respect to how trades are performed. There are various markets that we have. We have a main market. We have a junior market. You have heard probably quite a bit on the junior market, which was established in 2009. And these markets are established for a particular reason. The stock exchange operates markets. And the markets, by any definition, is just that, where buyers and sellers meet. Whether it is a coronation market or any other market, it's where persons have something to sell and the other person has something to purchase. So that's what we do, but we ensure that we operate it efficiently. So we operate from a principle of fair, efficient, ethical, and transparent. That's how we operate the market. We also operate in respect to two spaces, the primary market and the secondary market. The primary market is where we invite you to come, the business persons, to come and raise equity capital as against debt, especially in an environment where we are in a recession and also debt is expensive. We encourage persons to raise capital via the market, equity capital via the market. Then we have the facility to ensure that when persons raise capital, the shareholders that are in the market can enter again by buying more stocks or can exit the market. So it creates that facility to allow for entry and exit. The primary reason for the stock exchange as well is the mobilization of saving for investment for companies to raise funds. Any type of companies, we encourage them to raise funds. However, it is going to be raised within the portfolio. Well, let us say it will be raised in an atmosphere of regulation, in an atmosphere where persons who have given their money or who have become shareholders understand that the market, there is some protection for them in the market. Why should companies look especially now towards raising capital through the market? It allows for the expansion, business expansion. Even in a recessionary period, business still need to expand and grow. It accords or affords daily valuation. Now, if a company has, a private company, many times they are hard pressed to know what's the value of that company. The stock market allows for that, daily exposure of the companies that are listed there. It's a window to grow, and I'll emphasize utilizing equity capital as against debt. With debt financing, the clock starts to tick right away. With equity financing, where you become shareholders, you understand that you are going to be part of the growth strategy of that company. Persons do not readily identify with this, but it ensures good corporate governance. And this should happen whether the company is listed or not. But having listed on the exchange, it is a necessity or it is a must that the company must maintain good corporate governance. And we know the premium that that is realized through this. Once listed, it is easy for the company to access further equity capital. We could access those equity capital through rights issues, through capitalization, going back to the shareholders again for even debt financing. But the base is set for that to happen. And it opens a window for raising other forms of capital, either regionally or globally. Easier business access. Companies have found that if they raise capital on the market, if they are listed on the market, the credibility factor shoots right up. Where persons overseas will say, oh, you are listed on a reputable exchange, we can do business with you. And where we have now a lot of debt burden, it is really the important or the real opportune time to convert debt to equity.